Hi traders, this is Cynthia of Day Trade Forex bringing you a training video for the new Simple Neon Breakout system. And in this video I'm going to explain to you divergence and how we can recognize it on any time frame and use it to our advantage. So we're looking at a pound yen daily chart, and I'm going to start from the beginning of the chart and just pick out divergence and show you how to recognize it, and then how we can use it to enhance our trading decisions. So first of all, divergence, as a definition of divergence, it's when the price action does something completely opposite from the momentum. And you know that this bottom window is my momentum window or volatility window. And so it shows not only the trend but the momentum. These are trend bars, but they're also momentum bars. And of course this is the yellow signal line, and you know about the red zero line, and you know already from my other videos that when the yellow signal line crosses the red zero line, that's either an entry or an exit. What we're looking for is when price action is doing whatever it's doing. It could be going down, it could be going up, it could be flat. What we're looking for is that the momentum or the volatility is doing something completely the opposite. Starting right here, you can see with the red arrow that this was 2 candles, 2 days where the price went down. And of course you can see the long trend line is green, so we're not actually going to be selling this, simply because the green trend line is keeping us out of a trade that could possibly just be a failed consolidation range type trade that doesn't really go very far. It's one of the safety mechanisms built into this trading system. So if we look at this candle where we get the red sell arrow and our eye drops down to the volatility window, you can see that the volatility bar is very long, very strong, and it's red. And the next day is the same. And then here the volatility bar shrinks up, turns green, the yellow signal line turns up and actually crosses the red signal line. If you look at the 2 candles for these 2 days, they're green. So the candle is showing bullish price action, but the volatility is showing the exact same thing. So there is no divergence here. However, on these 2 candles, they're kind of engulfing each other. They're almost the same size. So these 2 days, price action was, a little bit stalled out. The bulls and the bears had an equal tug of war. But if you look at the bottom volatility window for this second candle, let's draw a line so we can see what we're talking about. You can see that the signal line and the volatility bar has shrunk back and retracted and is retracing towards the red zero line. So that shows that momentum or volatility is changing, and it's reflected in this candle here. But that's not a really good example. That's just a very poor example of divergence. So I'm going to try and find a better example of divergence. Maybe on this candle it would be a little bit easier to see. On these 2 tiny little reversal candles that are very small, the volatility here, you have one green volatility bar, but then it turns down and actually crosses. So it's actually what divergence does in the volatility window is gives you an early warning of a price change or a price reversal. In a daily chart, it's easy to look at it like this, but it's a little harder to see it in a daily chart in actual reality. So I actually never personally trade in the daily chart. I just use it for seeing what the current trend is, what it has been, and what it is today. And then of course I look at my volatility window, but if I see a potential trade setup, I always drop down to the 4-hour chart. But you can spot divergence in any time frame that you happen to be looking at and use it. So right here, there's not a lot of strong divergence. It's just very minor divergence. So there's nothing interesting going on. But I'm going to walk through this chart with you and try to spot some divergence. Here's a little bit of divergence where the candles have pretty much flattened out, and then here's a doji. This one, you can see the bulls and the bears were equal, but this is a true doji right here. So the price is flattened out right here. This is our first true instance of divergence, because if you look on this candle, it's very flat, and the next candle is very flat, and they're not that different from the red candle before. But in the volatility window, it's an early warning of a price change. So what it's telling you is that the bars have gone green and they're sloping back to the zero line. At the same time, the price really is flat. That is one form of divergence. So this is what they call bullish divergence, because it's an early warning that the trend will change. And sure enough, you have an actual, well, let's see, you still have your medium's trend line here that's pink. So even though the volatility bar went up and the candle's green and you have a green dot, you're still under the red slope here, and then the medium trend line is still red. So that's not a good example. However, the price does move up, even though according to the rules of the system this is not tradable to buy. The divergence here, it started right here. You can see how the slope goes up and then crosses above the red signal line, even though the price is flat here. And this is when the price pushed up to the upside. So this was early warning. These 2 days, you had 2 days of divergence telling you ahead of time that the price was going to change and move to the upside when we've been trading down so far. However, because like I said, the colors are mixed here, this is a no trade zone. Let's continue to look. Now here's another instance of divergence. When you start to understand this, it's so easy to see. But here you have 2 flat days. See how short the candles are. 2 very flat days. The candles are red, but the price action is next to nothing. But look at the divergence. Starting back here 3 days earlier, the yellow signal line started to slope down and the volatility bars turned pink and are sloping down, and now everything's kissing the red signal line. So that is your early warning on this bar. This is a very early warning. And notice how this candle has the Donchian resistance. The Donchian resistance arrow has appeared showing as prices touch the top of the Donchian channel. That's your first clue, and the candle goes red. And then the volatility bar goes red and the signal line starts to slope down. So you have 3 days prior warning that the price action is going to change again. And sure enough, on this day, this is not the day you actually enter, because you still have a green ball and this medium trend line is still green. But the next day, at the beginning of the candle, when you see the red arrow appear, everything is pink. Everything is pink and red. And if your eye goes down, then the volatility bar has crossed below the zero line and pushed down very strongly. That shows a very strong momentum on this candle day. You had 3 days of warning that the price was going to reverse. So you can keep that in mind when you're looking at your charts. You can use it to your advantage because you know ahead of time what the price is going to do. It's going to change. It's going to reverse. And so divergence is one of the only leading indicators that we have. It's not lagging, and my indicators are coded so that they're definitely not lagging. This volatility indicator down here is definitely not lagging. So whenever you see it cross the zero line, you know that that's an action point. So you had 3 days of warning that the price was going to change and go down because it's heading down, and there it did. And then you have all of these down days, and then here you have momentum sloping back up to the zero line, and you have 2 green candles here. This is another doji. That's a stalled trade, but you already know ahead of time. Even on this candle, it turned green. Everything is red, but the candle turned green and the momentum changed. So you know 2 days ahead when you get your first buy signal, well, the big green candle, you know that price is going to change, trend is going to change. Now you would not get in on this candle because look, you still have the long red slope. You don't trade against that long red slope ever. But and then this day you have another doji, although volatility is very strong. But here's the day you can enter long, and the volatility is very strong. The signal line is still slanted going up, and the arrow appears. And let's see what happens with this. Well, let's see. It doesn't really do anything. It doesn't really go anywhere like we would expect it to. It's not exactly what you would call a breakout, but you did know that this was going to happen. Now, even if this is not tradable in a daily chart, when you see something like this, jump down to the 4-hour chart, because in the 4-hour chart you can probably get a good entry, and the red lines probably would have disappeared by then, and you would have had the opportunity to jump in and buy, maybe even on this day here where the price was just a little bit better. On a daily chart, a doji can be tradable on a 4-hour chart. So whenever you see something happening here, that you always have to jump down to the 4-hour chart and off into the 1-hour chart to get a closer view. This is what you call the eagle's view, but you want a bird's eye view, a little bird's eye view, closer up view. Now here's some more divergence that's really obvious. Here you have two candles that are pretty much the same, and maybe by now you know a little bit about candles. You have bearish engulfing, bullish engulfing. This is pretty much a bearish engulfing candle. This was your bullish candle, and this is almost the same size. So it's almost a bearish engulfing candle, which means that it's almost identical to the buy candle before, but this is a sell candle because it's red. So it's showing trend change, even though all of this still turns green. But look at it in the volatility window. It's already, the momentum is already dropping off. And in the next couple of days, the trend really hasn't changed. It really doesn't go anywhere, but momentum continues to drop off. And so at this point, you could have possibly thought, oh, this is a sell entry, but look at the long slope is still green, even though the volatility bar dropped below. Daily charts are just a little slow to trade, I think. I think they're great for, like I said, getting the eagle's view, a long look at the total big picture, and it tells you pretty much, paints a picture of what's happened, but you need to look always and see what's happening today. If I were to look at this today, I see mixed colors here. I see a small candle. I see very short volatility bars. All the colors are mixed. So this is totally untradeable. Of course, it's Friday. Now I'm making this video on a Friday, so that's not surprising. And there was no news events that moved the pound yen. You can see today's average daily range is only 77 pips. That's a very small day compared to the average daily range over the last 10 days has been 116 pips. So today is a very small day, not a lot of action. But just to show you what I mean by this not being tradable in a daily chart, but it could be if we drop down to 4 hours. So let's leave that vertical line in place and let's look for it on a 4-hour chart. There it is. Way back here. Here's the vertical line that was untradeable in a daily chart, but look at how nice it is in a 4-hour chart. This would not have been your entry, but if this had been the day that you were looking for a trade setup, you just wait 8 hours and there's your perfect little entry. The volatility bar is above the red zero line. It's a small volatility bar, it's not really big, so it's not a big day. But if you had stayed in this trade, well, this had a pullback, so this would have been pretty much a failed trade because of this. But then you had another opportunity here to jump back in, and that's when it really started to do something. Not every trade is going to be a winner. I mean, there's no system in the world that's going to pick out perfect winners for you all the time. But here, That's like 125, anywhere between 100 and 150 pips almost. Not quite 150 pips. Yeah, if you'd stayed in there. But the rule is when the volatility bar shrinks back to the red zero line, you take either partial profits or full profits. Now at this point, this is where the volatility bar shrunk back, but everything is still so bullish. I would have just taken that as a very slow day. The momentum was very slow. You can see a very short candle, and it's after a day that was actually a doji. It tells me that price is nearing the top, and I can't expect a whole lot more out of this trade, especially when the volatility has fallen back to the zero line. That tells me momentum is really slowing down. A doji day means nobody won that day. The bears and the bulls were equal. They don't know if the price should go up or down. And the next day, even though everything is green again, that's a very small candle. However, the next day, price pushes up just a little bit more. So you might have thought, oh, maybe it's going to keep going up and up and up, but look at it, it's banging up against the resistance of the Donchian channel, and that's a clear warning that the price has probably found the top. Now you can see that all of these days, this is bullish, bearish, bullish, bearish, and the price is very flat during these days, contained between these two trend lines, pushing up against the Donchian channel, and you get the reverse arrow from the Donchian channel telling you it's hit resistance. So price is going nowhere these, let's see, 1, 2, 3, well, I would say 1, 2, 3, 4 days, and then on this day it goes down. But look at ahead of time, you had some divergence telling you the price, the flatness in the candles. You can see that the price is going to turn in reverse and go to the downside because all of this is heading down. If you were to use to draw, look at how the momentum is slanting down. Look at how price action is flat. So that's divergence, when price action is doing something completely different. Sorry, I can't get that perfect. Too hard to do it in a video. Divergence is when price action is doing something completely from momentum, and in this case of these 4 days, price is flat, but divergence is going down, momentum is going down, so it's telling you ahead of time that the price is going to change and start heading down. Sure enough, on this day you received the down arrow, everything turned pink except for this one long trend line. So and down here it's definitely sell. I mean, this would be a perfect sell entry if it weren't for that one. Let's change this because you have to learn how to use this. Very important that you learn how to use your vertical bars. So this would be a perfect sell entry if it weren't for this long slow trend line. But if you jump down to the 1 hour chart, okay, this was in a 4 hour chart where we could have had an entry, but we had that long slope. This long slope was still green, but here, if we had been looking at a 4 hour chart but then dropped down to a 1 hour chart, we could have gotten our entry 2 hours earlier. Right here is perfect. Everything turns red, pink, and the red arrow, entry arrow, appears, and the volatility is very, very strong. Now you can see how drilling down from starting at the daily down to the 4 hour and down to the 1 hour to get a good trade entry is really an important thing. Now it's only down for like 4 days, and then you have the volatility shrink back up, so you would have taken full profit. You would have closed out your trade here, but of course here's your next entry down, and that's good only for 2 days, so you would have taken partial, at least partial here, but then 2 days later you would have taken full profit. The price action is a little choppy. Look at how these days are very, very flat and the candles are very small, but look at how the volatility is starting to go back to the upside. It's slanting upwards. That's telling you 4 days ahead of time that the price is going to change, and it did on this candle. But that's not really a huge change, but the divergence was there, but the volatility bars are very small, so that's not a strong divergence. So I hope you can see the difference. Flatness, small volatility bars, not a strong divergence, meaning this slant is, it's not like this or something, you know, which is really strong. But it was there a little bit, and then we have another sell entry here and another one here, and so it keeps, here you have a lot of change in divergence, but you wouldn't get out of all your trades until here. Now look at how the volatility here is slanting much more strongly. It starts right about here. Well, it actually starts here because this is where the yellow signal line starts to go up. Not until the next day does the candle change. That's a more sharp divergence. The angle is sharper. And here you have price action just for a couple of days. It's a little on the flat side. Look at, here's your doji candle. So you have to learn how to recognize doji candles, just like you had two doji candles back here. This is a doji candle, and it says the trend is very uncertain. So this tells you that in the coming hours is going to go up, and here's you have an up arrow, but look at how flat all of these candles are. This is another divergence. Price really didn't go anywhere. Look at 1, 2, 3, 4, 5 days of flatness, but look at the divergence. Look at how it's changed. Let's see if I can move this divergence trend line. See how you can do that? Look at the divergence trend line is really sharp. So you have divergence here. 1, 2, 3, 4, 5 days of flatness where the price is flat, but the divergence is going down. The volatility is going down. So the momentum is slowing down considerably. So you can see the divergence here, and that tells you it's going to go down a little bit. It did just a tiny bit on this one day, but that's a failed divergence. I guess there is such a thing as failed divergence. I don't know. Here's divergence. I suppose you could call this divergence. There's divergence, a little bit of divergence. And this is where the price started going back up again. You should practice doing this. Just put up your demo charts and just go back in time and try to spot divergence. Teach yourself how to spot divergence by using your vertical lines and your trend line. This is how my trend line looks. Right mouse click on it so you can see the properties. So it's the ray is unchecked, and I have it white with just a little bit stronger so I can see it. But the trick is that the ray is unchecked, so this makes it short, and of course you can move it around however you want. Okay, here's some more divergence. Divergence can be strong or it can be weak. Here's a doji candle and 2 flat days. What's the divergence down here doing? It's going down. So learn how to move your trend lines around like this so you can see what's happening. Divergence is going down, however then the price shot up, so I guess that would be what you call failed divergence. I'm not making a very good example of all of this. Here's maybe a little bit of divergence here, and this is a very flat candle. This one in the middle here with the arrow, it's hit the top of the resistance, and then the next day you get a big push to the downside. So basically you had 1 day warning that the trend was going to change. So you'll always, or this is a 1 hour candle, so you have 1 hour's warning that the trend is going to change. You can be on the lookout for this to appear and for the big push to the downside. So I hope that this explanation of divergence has been sufficient to at least give you the basic idea as a beginner in learning about divergence, and there's more about it on Google if you need more information. But I do encourage you to practice going back in time and using your trend line and vertical line and spot divergence and draw your lines on your chart, because that'll train your eye to look to see it. This is very basic divergence that I'm teaching you, and there is more advanced divergence that's available in the advanced system. So in the advanced system I include another indicator that's very special for showing divergence, and it's just a single line, but it plots divergence on your chart and then gives you, in the bottom volatility window, it gives you a pop-up arrow alert when it spots bearish divergence or bullish divergence. So it's a very interesting divergence indicator, and it works in coordination with the yellow signal line and shows you very accurate entry and exit places. So I hope that you've enjoyed the training, and good luck in your spotting divergence. And if you have any questions, send me an email. And happy trading in the days and weeks to come, and we'll see you in the next training video.